Hi everyone, welcome to the prop trade. It's the final trading day of February. It's Friday the 27th, and we're going to have a quick look at how the PPI data is going to be reacted to by the market, and then we'll do a quick review of how February's been, where we're going, what the trends are, what's happening. Are we sideways? Are we up and down? Where can we make money? Where should we manage our risk? Where should we be invested? Obviously, it all depends on your time frame. If you're a short term scalp, it doesn't really matter. It's the end of the month. It's just another day, isn't it? But it is a Friday. It's the end of the week, end of the month as well. So you got a potential wrapping up of situations, of positions, of a churn of portfolios, all that sort of stuff happens. Losses get booked, profits get booked this time of the month and the week. As we always say, a profit isn't a profit till it's closed, and losing trade isn't a losing trade until it's closed either. So it's all about managing that equity curve. And how have you done for the month? We've done okay here. Much better than January. Had a shocking January on the end of day trades. February, we're in the money. We're in the money on our short term 5 minute scalps as well. So doing quite well. Thank you very much. Let me know how you're doing. Anything you want to look at in particular, let me know. So let's just move me a wee bit smaller. There we are. This is crypto, Bitcoin, the daddy of them all. The orange line here. This is the start of the month. This is the last trading day, or the first trading day of February. We're up here, aren't we? 78,000, something like that. We have 78,000. It's a 50. This was a big down leg we're in the middle of. Some were saying it might have ended here at the end of January, as we went sideways for 3 or 4 days, but we continued to decline, and we went all the way down to 60,000. So we've lost, not only in the month, but in that first week or so, we lost $18,000 on our Bitcoin per Bitcoin. We were down from 78 into 60,000. We've bounced since then, but really since that the fifth and the sixth volatility, we've really just gone sideways for the rest of the month. Can't breach 70,000. That's the key line in the sand. Look, one here, 1, 2, 3, 4, 5 days we ran into it. 2 days we ran into it. We spiked again up to it intraday on Wednesday, but a weaker attack this time. So as you can see, the lows are still getting, or the highs are still getting lower. The lows haven't got lower yet, but since the middle of February here, we've been trending lower, haven't we? We had that what looked like a pretty strong engulfing candle on Wednesday, only to be sold off yesterday and today at the moment. So a break of 70,000 is key if this is going to go higher. First, we need to be back in above the 20-day moving average, which we were on Wednesday, closed under it yesterday, and we haven't been back above it yet today. Support today is obviously this floor here at 64,000. We're currently at 65,900. So it's been a weak and sideways action. So a relatively negative month for Bitcoin, and still the sideways action dominates and has done since the 6th. And this end of the downtrend here on the 5th and the 6th, and we've gone sideways since. So 60,000 is equitable at 65,000, isn't it? And we're just above that at the moment, 66,000. So Bitcoin not looking too clever. As far as the indicators are concerned, on an end of day basis, the stochastic K and D line tried to move up courtesy of Wednesday's rally. We had a cross on the K and the D line the day before. We'd moved up, but now we've stuck, and we've got a touch again on weakness today. So careful trying to move this higher. See what the weekend brings and the new month on Sunday. But that looks quite weak as far as the MACD is concerned as well. Sort of negative movement here from our histograms. The signal line and the MACD line are moving up, but the angle is very shallow. There's some daylight between the two, so that's relatively positive, but it's not great. There's no clear diversions or anything to get excited about as far as price action is concerned. We've got sideways action. We have got a movement up in the K and the D line, a flattening of the histogram on the MACD there. So as I say, nothing to get too excited about, and negative here under zero as well. That's the other thing, but we're rising. So watch this space. I wouldn't be chasing that on an end of day basis, Bitcoin in particular. So let's have a just quick look at the calendar for today. I actually got the month up here. I'm not going to. I've set that up already. So let's have a the calendar, because the week and the month is the PPI data. That's a couple of weeks late anyway. Remember, the significance of PPI is it feeds into the inflation, bigger inflation picture, because it's the producers' inflation feeds into consumer inflation and consumer consumption and expenditure. So if we look at the, just bring up the investing calendar for today. It's got everybody on here. So it's got all the countries on here. So where are we up to? So we're here, PPI for January. This is 2 weeks late. 0.3 of 1%, down from 0.51%. So a bit of a softening again. House price inflation in Germany here is a tad weaker this morning. And German CPI came in quite significantly weaker as well, 0.2 of 1% compared to 0.51%. And the annualized number for February came in under 2%, so under target levels. So that's been a key data we've just seen coming out of Germany. We'll have a look at the euro in a minute. So PPI from the US, 3 stars here, about to drop. So let's have a look what that looks like on the euro chart. Interesting German inflation there. So like we have been for all week and second half of last week as well, rotating through 118, the euro dollar. Can't decide where it's going. It's non-directional. We've got flat Bollinger Bands, top and bottom flattened out. The 20-day moving average sits there just above 118 at 118.25. So no real clear direction. If I bring it into the reaction to the German CPI data at 1 o'clock, it was beneficial for the euro, as you might expect. Euro ticked up, but hardly anything to get excited about. It went from 118 1.7 to 118 5.5, so we're up 4 pips. And we've just given all of that back. So I'm guessing the PPI data may have dropped from the US. Let's have a look where that's gone. It's here. Is that updated? So PPI, that's just the weekly one. Let me refresh. Take me out again. Doesn't come through. Why doesn't it come through? So here we go, 3.6%. So it's actually hotter. So again, this is in line with what many have been saying, and me being one of them, that the stickiness of inflation, it is by its very nature sticky, and so therefore it takes a while for it to get out of the system, and history shows us that, and that's what's happening in this cycle again here. So core for January, 0.8 of 1%, up from 0.6 of 1%, which was revised down from 0.7 but we were expecting quite a drop to 0.3 of 1%. Annualized 3.6% from 3.3% last time, and 3% expected this time. And the headline 2.9% from 2.3 from 3%. So that's a tad weaker. The core is more important than the headline. The headline gets all the headlines, but again, it's much stronger than expected. Was expected to cut down quite a lot. I hate all these adverts. Let's just get rid of investing.com, shall we? That's just doing my head in. You pay for it and it still fills it full of adverts. There we go. Got rid of that. So dollar ticked up on that stronger inflation reading for PPI. PPI, as I just said, feeds into CPI. So it may be looking at, the CPI is remaining and CPE is remaining quite sticky. So it may, instead of, there may be some more rumblings about more cuts later in the year. Obviously, nothing really is going to happen unless something really significant happens with the data or some major shock between now and May, when Jay Powell quits his chair and Kevin Walsh comes as the new chair. The more hawkish Fed expected to be cutting rates more aggressively. But see how it pans out. So we're back under 118. We went as low as 117.93, 7 pips under the key 118 there. So again, that was a quite a heavy PPI read, and that's quite a response, to be honest, from a normal PPI reading. So euro down, dollar bid. Let's have a look at some of the other. And obviously combine that with the German inflation data, which was the other way around. So if we look at some of the other dollar crosses, so that's the euro weakening, but sort of coming back literally within 3 minutes of the initial reaction. Yen 155, so back under 156. But again, dollars had a better. Sorry, it's 5 minutes, isn't it? Had a quite a hefty early European session. We'd been down overnight into 155.60. Europeans have bought dollar yen up this morning. Early morning, we went to 156.15, and we're back down into this data and the US Open in still an hour to go for the key US cash session starts. Quite a hit yesterday's session. Big moves on many of the key names. Nvidia was particularly obviously announced its earnings after close on Wednesday, so we were down 5% yesterday. Nvidia. We'll come to the stock market in a minute, but the dollar's somewhat lifted a wee bit by that data. So 156 for yen, again very much sideways at the top of its range for the week. We'll come back to the month when we've been through the reaction to our data, of the data. Sorry, I've got MACD on here and it's messing me about. Sterling 134.56, so giving up that key 135 handle. Yesterday's by-election result in the UK, if you haven't seen, it's a bit of a relief rally that the Reform Party didn't get in as far as sterling is concerned. But so sterling gained a bit this morning. That's last night. We were down on the worries about what might happen into 134.50. We recovered as the announcement came out, but then it gave it all back. We went to 135. And then give it all back as the announcement came through. The Green Party have got a new member of Parliament. I think it's only their second MP, and beating off the right wing Reform Party, which was what the market was worried about initially. But the big news is that the incumbent government, the Labour Party, came in at quite a distant third from the other two. The winning margin is quite significant for the Green Party. So the sterling then gave up all its gains, worry about over the premiership of Keir Starmer, how long it could survive. And at the beginning of May, so a little over 2 months away, there's some key local elections, which again, the smaller parties, particularly the Liberal Democrats and the Reform Party, again, are looking to make vast gains and potential bounce back from the Conservative Party. Remember, the last government here in the UK was Conservative led. They came a very, very dismal fourth. And they might have even been behind the Liberal. No, they weren't. They were a very dismal fourth in that by-election. But it is only one by-election. It's not a general election, so can't read too much into it. But it's quite significant that the Greens have picked up all those votes in a very, very strong Labour ward. I might have to add. I mean, it's for 90 years. It's returned a member of Parliament for the Labour Party in that part of Manchester, and the appeal of the Greens, particularly around in young people, for young people, has taken off quite significantly in the last couple of years as the jobs situation, the cost of living crisis continues to grind on the price of heating people's homes, price of food, all those sort of things continue to hang on the government, whether it's the previous Conservative government or the current Labour government. So Sterling is suffering from that uncertainty, hates uncertainty. Will the Prime Minister survive? That will further weaken the dollar. Further weaken the sterling, and dollars up on the PPI data. So consequently, sterling dollar is down 134.45 under the key 134.50 range. I think that might be a low for quite a while. I think I'll take it up to the daily time. What were we last down here? Indeed. Well, we got low there on the 20th and the 19th. So next support is that the price we were at when Trump started speaking down in Davos. It's amazing how many times this has been tested on all the charts when I put this level in when he started speaking in Davos. So that's the next support level for cable, 134.30. We're currently at 134.45. Canadian dollar 136.80 up, and again daily, it was been saying all week, nothing going on here. Again, consolidating sideways. If you look at the 5-minute chart in reaction to the US PPE, I guess it's ticked up. Indeed, it has. There we are. Quite nicely, but again, relatively range bound. You see on the 5-minute, the range is widening here. So the lows got lower, the highs have got higher. So got a bit of a range bound. So we're down there. That was the cross to go long. In fact, it's only actually, it's crossing. It's not on that one there. So that's triggering long, but that's very much range bound anyway. So be careful trying to get any out of that dollar CAD pair as we continue to sort of go sideways and not breaking out of our range. Sort of edged down a bit this morning, and then we're up now. So that's actually relatively bid today on the hourly basis. So that's quite a nice little move to the upside. Would have triggered there on the hourly chart. There's a nice little, let's see that trend here through the 20-hour moving average now, and this was 6 o'clock this morning. So nice move down, cross there, moved up here on the 8 o'clock candle. There's the cross there. The 7 o'clock's not clean enough. I'd have to wait until the next one, the 8 o'clock candle. So it would have been long here. On the completion of this candle, we've seen that the wick went down there. So my stop loss would have been down there initially. And if I'd sort of pulled it up on this move up, we'd have been whipped out. There's been quite a bit of volatility in that pair. We're moving higher now. So breaking through the 20-hour has given it more legs, and 136.80 is the next resistance level, and that's where we are now, 136.80, right into that top of these wicks here from yesterday's action. And the top of the Bollinger Band coming down to meet us as well. So are we going to break through that and move higher? So 136.80, dollar CAD, dollar looking a bit more rosy against the Canadian dollar. Australian dollar 70.88, so closer to 71 again. We were over 71.20 yesterday. Went to 71.30 earlier this morning. And since then, we've turned around and moved back under 71, and we'll hold just under 71 at 70.90, but certainly down in the dollar on the front foot here. It's already touched the lower part of the Bollinger Band here. We're still moving down on our stochastics. MACD has also crossed over, so that's still got potentially some way to go, but will we find some support as we've touched the outside of the Bollinger Band there at 70.89 under 70.80. The low was this morning? It was last night, wasn't it? I thought it was 70.78. So another 10 pips to the downside before we get to yesterday's end of our hourly low. The intraday low yesterday took us to 70.67. That way, a step too far, but certainly dollars on the front foot. So this is like the inverse of the dollar CAD trend. We've got a nice trend moving down, breaching the 20-day moving average there at 11 o'clock, and a big follow through candle now on that data as we come to the open. Aussie Kiwi 59.70, similar pattern one would expect. There we are. It rolled over earlier. The Kiwi 59, not getting to 60, 59.95 yesterday. And then this morning we went to it again, and then again it's rolled over nicely in a big extended candle now. Now the Aussies and the Kiwis are all well entrenched in their weekend. Their currencies weakening a tad against the dollar, and again touching the outside of the Bollinger Band. Where do we go from here? Well, this is looking for a cross. The MACD lines have just crossed to the downside this current hour as the price unwinds to the downside. And again, like we saw in the Aussie, next support is $.5960 from day before yesterday. In fact, no, sorry, from yesterday's low, but it's been a key level this week as well, 59.60. So don't rule that out. If we break under the Bollinger Band there on the Kiwi. And finally, the Swissy 77.08 as we speak. And again, dollar stronger. This is yesterday morning. We hit our high for dollar Swissy. Sorry, it's the Swiss stronger, the dollar weaker here. So it's the reverse we've got here. So moving down yesterday into close, and then we continue to weaken against the incumbent Swiss franc. 77 looks like it's going to get breached. We're at 77.7 at the moment. We haven't actually been under 77, 76.98, presumably as the head of the data, and then it's come back down. There's the data. We're absolutely right at the bottom of our range there, 76. In fact, it went under 77, 76.99, and it's dollars, as we've just seen with the others, has bounced on the PPI data, being hotter than expected. But the trend, the lower, has been very much in place today here for dollar Swiss. So Swiss having a good day, euro going sideways, CAD weak, Aussie and Kiwi weak, and sterling week because of the political situation in the UK, adding to the mess of things. Yesterday, we obviously had the meeting between Iran and Trump's son-in-law and his golf buddy, Witkoff. Nothing came of that, but the armaments. The US armaments are all in place. Remember, Trump gave him a 10-day, 15-day window for the Iranians. The Iranians are still keen to talk, but will the president be goaded into action? Things cooled on the oil market yesterday, which is not a perfect indicator of what's going on, but we're at 76.80 today. So, sorry, cooled. Let me just take that up a bit. We had cooled, I should say, yesterday. On the ahead of the meeting, we were a bit panic-stricken. The meeting commenced, and we moved down again into 65 zone. But since then, today, remember as well, of course, we're in the middle of Ramadan's just coming to the end of its first week. It's key religious day in the Islamic world, Fridays, and the oil market has suggested more worries. So we've moved from $65 all the way to $67.25. So it's a significant nearly $3 rally from late last night when we were at $65. And indeed, yesterday, as the meetings were taking place, we went all the way down to 63.70. So inventories, as well as the geopolitics, has pushed the oil markets to highs. And we are showing a wee bit signs of weakness here on that stochastic. But if we look at the MACD here, that's still really strong. The histogram's building. The gap between the histogram line, the signal line, and the MACD line is expanding, suggesting a bit of overbought movement. But as you can see there, it's a strong move to the upside. So oil market is suggesting there may be some. They're worried basically about supplies. So we're at 67.75 at the moment. And if we take this up to the daily, we'll come back to I'll do the monthly stuff in a minute. But this has been very much driven by that. So we're holding 65, which is the key thing, which is now deemed a support area. And we're now at a high we haven't seen here at 67, close to $68 from that spike before the tanking down all the way back to summer 2025, July the 8th, 2025, we were last at this level. So worry is being enticed. So that's what the markets are pricing in. And similar pattern on Brent as well. The global benchmark 73.60, and again at levels not seen since. In fact, further back, this is June the 23rd, 2025. And that was a big down day following a very steep rally at the beginning of June. So we are getting a bit stretched, and you can see here that's a good example on the daily on the Brent. Higher highs here on the K and the D line on our stochastics. Not as high as we have been here. That panic here in June, in the summer of last year, but obviously the seasonality is very, very different. But the geopolitics hasn't changed. That was the attack on Iran by the Americans, supported by the Israelis, when they said they devastated their nuclear capabilities. We'll see if that is actually the case, won't we? But and that was the other spike there in spring, the anticipation of it. But again, being very volatile. So we haven't quite got there as far as price action is concerned. That took us all the way to $79, but we are at 73.60 here on Brent. So there's no sign of that trend breaking at all, is there, in a daily time frame? So we are in worried times, and the deadline is looming. The window, the 10-day, 15-day window is coming to an end. We're already over the 10-day level, so hence the moves. Stock markets on say yesterday were actually, let's show you the, rather than me talking about, let's show you the that one. Stock markets on the about to open, so there'll still be yesterday's big move down. Yesterday's red across the board. Futures already are down again today. Nvidia closed down 5.46% yesterday, or 4% when I was doing my little video for this morning. So they weakened it further. Red across the board, yes, particularly the tech stocks. If we look at the Nasdaq, down 1.18%. Dow managed to close flat, basically back to where we were, but it had been weak for most of the day and just clawed back in the afternoon yesterday. S&P pulled some back, but was still down 0.5% yesterday. The big casualties yesterday was driven by the world's biggest company, Nvidia, off 5 and 4.6%, having beat earnings and issued a very rosy outlook. The market is getting twitchy about the lack of action in China. But to be fair to Nvidia, they said it didn't include the future performance, the future revenues for first quarter, which were much higher than expected, 76 to 79 billion. Compared to the market street's guidance of about 72.8. So that's a big beat. Regardless of all those positive spins and the positive analyst call, the semiconductor space took a right old hit, led by the biggest one of all, following the earnings from Nvidia. So Nvidia were down, Micron, Broadcom, AMD, which is at this week, that was down 3-4%, and Intel, Trump's Intel, were down 3%, and that's Monolith Power Systems. So big hit for the semiconductors and the software businesses as well yesterday. So Dow was flat, S&P was down, and the technology driven Nasdaq was the most significant loser of the three big US indices. So just go back to the home, you can see the data for yourself. Cash market about start in about 40 minutes time. Futures are generally a bit firmer this morning, so we'll come back and have a look at those now. We'll start with the Nasdaq. It's the worst performer yesterday, but we are as yesterday's down. We were up early. Actually, we're down again today. So the 27 were down again today. So that was the last time I looked at it. When I opened it, it looked like it was holding on to gains, but we've given up that 25,000 handle whilst I've been out. We've given up the 24,800 level as well, which is quite key here. You can see on the hourly chart. So the trend pre-market is very much to the downside for the Nasdaq. The S&P 6851 currently, and again similar pattern, up earlier in the Asian session, and the opening European trades were positive, turned around 9 o'clock, and we've continued to tick lower. Strong 4 or 5 hour trend to the downside for the S&P. And it was brutal, as we saw yesterday afternoon, but still a weak start to finish off the month. We'll come back to how much of this is profit taken as well, given it's the Friday weekend and the month end as well. Dow 49,000 has been breached this morning as well. So down again, and quite a bigger down candle than the other two so far today. 48,986 trends at the moment. That's down also. So new pre-market lows from a couple of hours ago. Pre-market lows down there. There's pre-market high. Gap opening to the downside, interestingly, this morning. So there's our high, there's our low for the pre-market so far today, Friday, but that's moving lower. FTSE in the UK, on the other hand, has just gone to new all-time highs this morning on the weakest of sterling. 10,900 has been breached. 10,915 we got to earlier this morning. So that's continuing to move to all-time highs. The DAX is following its US Patriots to the downside, and again another one that's been down since this morning. We went to 25,400 this morning briefly, and now we're back down to 25,260, having been as low as 25,280 in today's session. That was pre-market. Well, yeah, it was yesterday. So that's our low, just been put in this hour for the DAX, 25,206. Oh, 25,200. Got it. So quick turnaround from earlier this morning for the DAX as well. And finally, gold receiving where's it gone? A bit of a bid, but it's still very much channel bound this week. We've had this rally up. We started the week around about this 5,100 and plus level, and we've held 5,100 all week. We got as high as 5,250 on Monday into Monday's close. Came back on Tuesday, and we're now pushing back to looking left to Monday's highs. So strong current hour as dollars improve. So is the gold market, interestingly, here on Friday. So let's look at the daily candle on there. We'll go to the monthly review in a minute, unless anybody's got any questions about today's actual data. No, it doesn't look like it. So this is the daily chart for gold. There's Monday's big uptick down on Tuesday. Couldn't move as lower. We held the 5,100 level, and we've ticked higher Wednesday, Thursday, and again today. So are we going to close another positive week for the gold market to the upside? If I just shift this, we start our monthly review here and go backwards, basically up the assets. So obviously, at this time last year, the last trade, in fact, it was there, wasn't it? We'd had a big old, we'd had a massive January, very parabolic moves. We were talking about it all the way up, weren't we? And then the huge sell-off we saw on that final trading day of the month. Doesn't look like we're getting anything like that today, but big profit taking. We then went down to start the month, the new month, and we were as low as $4,410 on the gold market to start the month, and here we are closing the month at 5,220. So a big turnaround, steady turnaround this month. Some nice positive big candles as well to the upside. Some big positive, relatively big candles to the downside as well. See, the recovery has actually been stronger than this first leg of the rally. So new all-time highs certainly possible for March and the spring for gold if the strikes on Iran come forward. There's no further any movement in the Russian-Ukrainian situation. Gold has got all sorts of central banks stocking up, and as you can see here, really for this second half of February, I mean, look at the stochastic lines have been nicely positive. We've edged higher. We've been over the 20-day moving average again since for about a week or so now, since the 20th this time last week. We've broke away, and we've had a good week, good buying on Monday, and we're currently finishing the week quite strongly. So if we look at the weekly charts, and we go to the monthly charts, the weekly charts, what's all the panic about, lads? Let me just take that off. Let's put it back on, don't we? What's all the panic about, lads? These are the weekly charts. We're going up, we're going higher, and there's no sign of that moving higher. No, sorry, there's no on the price action. There's no sign of that fading. If we look at the technicalities, just this stochastic technicality, got very overbought, and it's moving down. But there's a big divergence here. The stochastic K and D line here are moving down. The price action is moving up, but it's been going on like that for well over 4 weeks now, 5 weeks. So when it does bang, it could be quite significant, like we saw that in that week here at the end of January. But as you can see, since then, you can't. That big sell-off day is just absorbed in the wick of this weekly candle. Now, if we got the monthly charts, again, less to actually worry about. It's very steep, but we've been in an overbought situation here since June last year. Oh, let's be fair. Let's take the next one. July 22, not last year, the year before, 2024. So don't get too hung up. The bid on gold continues to move higher. There's all the debt in the world, particularly in the US. The geopolitics and the uncertainty, standing the geopolitical norms on its head in the last year or so has just added to this bid on gold. The buying by China and Russia, India in particular, of the bullion market has added to the structural changes in the gold market and the commodity market wider. And then the AI boom, is fueled by hard commodities like copper and silver and gold as well. And it's all just, all come together, and it's been one hell of a move. And we've all been party to it. Many brokers are suffering from these big moves, all in one direction, and no better demonstration of that than the monthly chart. And February is showing no signs of weakening, is it, my friends? Look at the size of the body of the candle for February. It's not like January, but it's certainly substantive, and over 5,000, over 5,100, 5,600 was that all-time high and on this monthly chart, it doesn't look that far away, does it? So a strong, or not as strong as January, but still a very strong February for the gold market, having recovered from that shock virtually immediately at the beginning of the month. Silver got even more exaggerated. I don't know many who trade silver, but there's the daily. Similar shakeout on that 30th of January. Recovery, but nowhere near the recovery that gold has seen. So we did get, sale a bit too high for silver. Again, if we look at the weekly charts, the recovery is, having a go at 50% of the big shakeout. It's still under that. If we look at the gold, sorry, I took it off, didn't I? Look at the gold recovery. From our high to our low in those frantic, first days, we're way over 61.8. You can see the recovery, and you can see the silver market we just seen hasn't got back to 50 yet. So gold recovered much more than silver had, but silver, soared even more so than gold did. So that's the daily. The weekly chart for silver is still positive for the month. These are the second 2 weeks of the month, bouncing back. We're still stuck at that 50 of the retrace. So if it's going to go like gold went, again, it's still got some more legs to go. So the monthly chart for silver, positive again. It's January, and this is February. It's a big wick. So again, what you're worrying about? This is going higher. We've had a really strong move. All the same reasons we got with gold, but an exaggerated move on silver, and $95 is the next key level to the upside as we move into March, and obviously all-time high up here over 120, wasn't it? So metals, commodities generally bid. Similar charts for palladium, platinum. If I had them on here, I'd show you them as well. So the whole commodity complex very, very well bid. The only thing that slow it down really is a sort of significant strengthening in dollar, and with the expected 2, possibly 3 cuts to come on this year, with the new Fed chair, for the dollar will the uncertainty in geopolitics still adds to the metals bid. Okay, so stock markets had a mixed month. Let's start with the Nasdaq. Let's work this backwards. So a down a month so far. A down month for the Nasdaq. Remember, February's key because it's the we have the data for the end of the year and the earnings season rolling over. Being announced during February, so we'll do this in backwards. So it's a down a month for the Nasdaq. The weekly chart was looking okay earlier in the month, but we were down the first week, down the second week, bounced a bit last week, but that was an engulfing candle within the 2-week move lower, and we're down again this month. But the only positive thing again is it's been engulfed by the distance we've traveled this week from open to close is narrower. So we got a narrowing here of the candles, and we may have found a floor, but we're still significantly in the under half of the Bollinger Band, and we have been for all of the month. It's the key story for February for Nasdaq. So breached the into the under half of the Bollinger Band the first week of February, and we haven't recovered. Looked like we were maybe on last week. It didn't happen. And the key, you can see there very clearly, the key $25,000 level is key. And then as we start March, we need to be over the 25,250 level. This is going to start to move up again. But still, on the broader term here on the weekly chart, we're still really in that consolidation phase. But weakness under 25,000, further weakness if we go under 24,000, 500, and then 24,000 is where we went to when we were panicking in December, or the beginning of December. Was that December, that week? No, middle of November. It was not December. So 24,000, the downside level. So there's the 24,000 level. There's 24,500 at the bottom of the Bollinger Band, and 25,000 is the big purple line here. So you see airing to the downside at the moment, but nothing to get too worried about at the moment. But direction is required. Are we finally grinding, consolidating, and then to be a big leg lower or another burst out to the upside? Again, obviously, only time will tell on that one. The Dow, similar pattern, and because we were quite positive in the first week of February, we closed down the second week, and down this week as well, quite significantly. We're still, the trend is still much more bullish there on the Dow than it is on the Nasdaq on this weekly time frame. So we're still in the top half of the Bollinger Band. We've still got lots of fresh air before 48,300, where the 20-week moving average sits. You can see zoom that in. Well, I can't zoom in. You see the support level there, these wicks here on the weekly chart. That's that wick going back to the beginning of the year, the first week of the year, the 5th of January. And that's where the 20-week moving average is there at 48,300. But, the second, third, and fourth week of February have also been weak for the Dow. Obviously, new all-time highs we saw in February as we breached the 50,000 level for the first time. Held it for a few days, but the close of the week, last week before last, we were down again. Nowhere last week, and down this week as the earnings season wraps up for Q4, and Q1 still got obviously a full month to go as we head into March. So the monthly candles still remain relatively positive, although it's a weak-bodied weak-bodied February with a strong wick to the upside. Remember, wicks suggest rejection of higher price. We did that in January as well. So the body of the candle is suggesting maybe this is the stall point, but we had that middle of last year as well here in July. Didn't go anywhere, and then had a very strong August admittedly on lower volumes, but then had a strong good end of the year for the Dow. So an up month for the Dow, down month for the Nasdaq, significant down month for the Nasdaq, and the FTSE, the S&P 500, the most important one of them all. Also, like the Nasdaq, having a down month so far. So again, a bit more of concern. I've got more data. More of a rolling top there on the S&P 500. 7,000 couldn't be held in January. Couldn't be held in November, in February as well. So again, similar pattern. Good week, bad week. Good week, bad week for the S&P for February, but again, sort of consolidating that and riding the difference between the Dow, which is significantly above its 20-week moving average, and the Nasdaq, which is under its 20-week moving average. The S&P is stuck on it basically, but again, you can see. Hopefully, you can see. Let me try and move that up, move that down, make that a wee bit bigger. So again, why did it not move? There we are. You can see there's the 20-week moving average. We've come into it on that second week of February. Tested it again last week and tested it again this week. And, will we close under it tonight when the market closes for February? We shall see. But 7,000 has been you see here on the weekly chart, has been a big round number too far for the S&P 500. But the 20-week is sitting there at 6,800 and just around about 6,850, we'd say, wouldn't we? And the bottom of the Bollinger Band now, 6,700. That's what that purple line is, I think. Yeah, 6,700 area. So that's our support going into March. And can we get over 7,000? We'll see. Probably not, is what that's telling us. I've been tested it for 6, 7, 8 months. to the upside. Okay, here in Europe, so we saw the FTSE a new all-time highs just today. So the weekly chart looking nice and rosy, obviously in its overbought area. The DAX, on the other hand, down from its all-time highs in January, but up this last week, quite well up this week, but less so. So again, all-time highs, 25,580 for the DAX. So a better February for the European major indices than the US indices when it comes to stock markets. The Nikkei obviously had the trauma or the good fortune of a new prime minister, lifting it to new all-time highs again. So this week we've done the same thing. 60,000 was nearly taken out, not quite earlier this week, but that remains bid. A good mid day on Wednesday. Come down yesterday and down a bit today, but again here on the daily time frame, nicely bid. There's December, that's the end of January, that's the beginning of February, so it's had a strong February, courtesy of the elections at the beginning of the month, and a very big, significant landslide for the new Prime Minister, Mrs. Takahashi. So prices moving up, although the Takahashi have rolled over to the downside. So maybe suggesting weakness, but can't really decide what to do now. So still holding at highs at the Nikkei. The dollar, I'll just do the dollar when it comes to the week ahead. So I'd use the euro, yen, and sterling. I've been here. What time has it been here? An hour now. So I've running a bit long. So apologies for that. So let's just go to the weekly. So euro hanging on to 118 for a week and a bit. So the bid to the upside for the euros faded significantly last week. So if we go to the, let's move this to the beginning of February. So dollars had a better, I say it's a mixed bag, but had a finishing stronger than it started the month. So actually, just got the daily. But 118 is the key support area now, and has it stretched a bit too far, some would say. So there's no clear signs that the dollar is back on the front foot against the euro, although last week was quite a significant move engulfing the previous 2 weeks action, and it looked like we were overstretched at 118 as we went into February. But then we went even high over 119 at the beginning of the month, but we've come back to it. So this might be our new pivot area from where we were pivoting at 117 earlier in the year, in the second and the fourth quarter of 2025. So 116 is all the way down here, 117 through here again. At 117.30 when Trump started speaking. So a mixed month for forex. And it on the daily time frame, you can see this key directionless last 5 or 6 days, say 8 or so days following the move down on the 18th of February. I'll remain in the under half of the Bollinger Band. 118 is a pivot area in the euro. So a mixed month for euro dollar, similar for the other crosses as well. Save the yen, obviously the dollars come back. Let's look at the weekly. Start with the monthly, come back. So a strong tick up for the dollar this month. Obviously, the election was key to the weakening of the yen this month. So dollar started the month at 154.80. We've been as high as 156 we saw earlier so far this month. As the panic of the election week, there's 159, and dollars bounced back last week and again this week, 156. So the enthusiasm for a stronger yen has cooled, and the dollar's has cooled. Sorry, and dollar yen has bounced in the last couple of weeks. So again, a bit of a mixed month for dollar yen. Here on the weekly chart, the stochastic K and D line is still negative, but we've had an awful lot of volatility. 158 still remains a sticking block. I mean, 157 below that, 157.75, 157.50, but 158 is certainly looks like a step too far for 2026. But we shall see as a big upside target with 56 level, having been into, as we said earlier in the month, the 152 zone. So huge week, the election week, and the yen, having gained significantly, has given a lot of that back. Well over 70% of that, isn't it? I think of that gain. That's the 78 level. So well over, about 70% of the gain it had post-election has been evaporated in the last 2 weeks. So 156 is where we're going to start the March trading. And fine, I'm not going to go through them all. Actually, I'll do the. I will do the other three. I'll do the other three: Aussie, Sterling, and CAD. Or Kiwi. Don't mind. Better for the dollar against cable. A lot of it's politically driven. Say weakness, particularly this week for sterling, but dollar back. A weaker. Less move on cable, but the trend remains to the downside. Those January's, it's daily, not I meant to go to the monthly. So strong January for sterling, and December and November, but that's all turned around in February is what I was trying to say. Got to 138 zone, couldn't hold it, and we've capitulated quite strongly at 136, 135 has been given up, and 134.50 is our support area going in to the new month. So if we look at the weekly chart, there's that 134. 134.50, and that's it's been down since the beginning of the year, sterling, and at the beginning of the middle of all of February, but we're back to where we were sort of the beginning of the year at 134.50 under the key 135 handle. Looked like a couple of weeks ago we've got to hold the 136 area as well, but that wasn't to be last week. And we're down again this week. Aussie has outperformed the others, and it still remains bid. Here you can see clearly on the weekly chart. We're into our 10th, 8th consecutive week to the upside. Australian dollar over 70, over 71 this week, and another bid. So a strong month for the Aussie. And again, that's not looking like to turn around. It's the speed of the reaction has taken us through 70. So likely to perhaps come and retest 70 area during March, but a strong start to 2026, as was the end of 2020. 5 for the Australian dollar, overbought here, but we've been overbought, since December, since November, in fact, when we went over 66. So we're now, been to 171. So this has been bid for a long time now. That's the monthly chart, guys. It's positive. Weekly chart looks really nice as well. Steady old candles, bit of weakness in the last couple of weeks, but still steady to the upside. Obviously more volatility in the daily, but the ramp up through 70 is held all of February, basically, or most of February. We did dip under it that first week, but since the tick back up there on the 9th, we've held 70 since then, and consolidating highs is always quite positive, just like we did here, and then took higher. We've done a similar pattern here. So Aussie, the best performer again, against the US dollar. Swiss franc also on bid daily down because went into 76 at the beginning of the month. And gone sideways, a bit sideways action since then, but the higher time frames remain, very. The trend remains very much set. That's the weekly. Good week, bad week. Good week, bad week. Good week for the dollar last week. Look, a big engulfing candle looked like it was taken out the previous 2 or 3 weeks. The big jump down we had at the end of January. We closed really strongly last Friday at 77.60, but we opened much lower today this week, and we've moved lower again. So an engulfing candle weakness in the positive candle. So props. This is the floor potentially, but too early to tell. And so the weekly. That is the weekly, and the daily sort of sideways, not showing a positive direction or change, breaking out of the over the 20-day last week, and then came back under it again this week, and back down again today. Looked like we were back over it yesterday and then back down again today. So we need to break this range for a clearer direction. What you could say is clearly buys at 76 for the Kiwi, for the Swissy. And as we go into March, there's our trend line going into March. So we watch that on the daily time frame. So 76 is the big bottom. Leave it there. 76 is our big bottom, but we need to break, or the dollar needs to break 77.50 for this to break out of our little triangle. The flat, the triangle there. If we break out, could take us back to 79 and filling some of those gaps still on this chart. That's not really completed. So 79 potentially, but it looks a bit step too far. We'd have to see some significant weakness in the Swiss franc. So Aussie's outbid for the month, and a mixed picture elsewhere for the dollar. Okay, I'm going to wrap this up now. I've been here over an hour, my friends. I'll leave you with crypto. The market never closes, does it? The weakness. We start with crypto, we'll finish with crypto. This sideways action. We're closer to 65 than we are to 70. At 65, no, we're not. Yes, we are 65. Oh, 66 still. Was 60 the low for the year? Some are saying too early to tell, undoubtedly. But in the last week or so, we've been as low as 62,700. So it's not looking particularly positive yet for Bitcoin. Consolidation continues. So have a safe weekend, everyone. If there's no questions, no, there's nothing in the chat box here. Take care. Keep your loved ones close. Be safe and be happy. And may the pips be with you, my friends. Watch the Discord group for any end of day trades tonight. I didn't post any yesterday. I did actually take some. I'm getting a bit slack on that. I'm slipping up on it. I've been doing it for well over a year now. So. I'm not posting every night, but I'll do an update for the week and for February. I didn't actually do last week's update, did I? But anyway, I'll have a sit down tomorrow. Friday. It's been a bit busy recently, other parts of the world. So check the trade chat. There's other people adding to this now, which is always quite good. Obviously, post them, guys. Post your ideas before it happens rather than afterwards. Shashwat is really good at that. Bless him. He's giving it a right old rollicking. He wears his heart on his sleeve. Bless him a lot. And his comments are great. I should react to him a bit more, to be honest to him. But very much a volume trader. So let's have a look on here on the trade chat. The last post I put on here was the other night when we were long the Aussie. As we saw, that should have hit its target. Well, it did hit its target. I think long sterling, which I think that stopped out. That must have been stopped out. And short euro New Zealand on that one. We looked for an upside, but it's gone. I can't remember. It was going sideways. That none of them were going anywhere. Whether when we first put it on, but that was from the night, Wednesday night. Nothing yesterday posted. Also, see how that goes for February, because that's the last of the posts, isn't it? And anything that triggers tonight will be March trade. So take care, everyone. See you Monday, and have a great weekend and new month on Monday. Take care. Watch the volatility later on today. The US stock market's just about to open, so I'm off to